Matt here commented about MSI, Motorola Solutions, and wanted to get my take on Motorola. I will qualify all this and say I'm not a licensed financial advisor. This is not a recommendation. It is not to be received as advice or a trade recommendation, but let's go ahead and evaluate this stock for Matt right here. So MSI, he is correct. It has been up around 500. Back in mid-September, it was up around $500 a share. And ever since then, it has just been a straight drop off a cliff down from the high of around 495 all the way down to 360. So about a 27% drop. So the first thing I see when I look at this chart, which is just a daily chart with the yearly VWAP with one standard deviation bands on it. First thing I see when I look at this chart is that we have been below the value of this price, below VWAP, below the deviation band, and now we have come back up to that deviation band. My mind immediately goes to looking for a continuation move further to the downside. So maybe we've reached this level and now we're going to go back down and retest those lows, see what's below there. Maybe we can get some more selling and go down to 350, 340, somewhere like that. So if I were going to trade this stock or trade an option spread on this stock, what would I do? Well, if I'm slightly bearish, I would want to do maybe sell a call credit spread, or you would do my favorite move, which would be to put on a put diagonal spread. And so to do that, we go to the option chain for MSI, which is not very liquid and not many expiration dates, no weekly expirations. You just have a handful of monthly expiration cycles. And I would look at the February 20th with 45 days till expiration and maybe sell the at the money call it maybe the 375 or I'm sorry, the 370 or the 380. Sell one of those, and then you go to the next expiration cycle out, which is the April 17th, 101 days till expiration, and you could buy the 380. So let's say we sell the February 370, buy the April 380. That creates a debit of $9.75. But my biggest challenge with this one is simply the liquidity. If you look at the bid-ask spread of this stock, the bid and ask between each of those options is about $4 wide. So total, selling one option, buying another, you're looking at a spread of nearly $800 end to end to put this on. You are going to get eaten alive with the spread on this. Very, very little volume, very, very little open interest. So this is not a good play in my estimation for an option play, but if you are going to do something with options, this would be the kind of strategy that you would look at doing. So hopefully that helps, Matt.